Coming out of tax filing season, here are three things that I think real estate investors should be mindful of before they go into the next tax filing season. So the first thing is having a general understanding of what forms does your real estate kind of fall on. And no, I'm not saying you have to become a CPA or tax professional and really understand it at that level. I wouldn't wish the CPA journey on anybody. But what I am saying is that if your property needs to be on a Schedule E and you have it on a Schedule C, you might want to know about that because your property can be treated like a business or it can be treated like an investment. And if it's mistakenly treated like a business, you're going to pay additional taxes on that property in which you may not have owed if it's supposed to be treated like an investment. Having a general high-level understanding of this will help you out going into next tax filing season. The second thing that I would say is keeping track of your suspended losses. For a lot of people, real estate is a passive activity and y'all have losses that you can't really tap into right now because of your specific situation or you don't have the right tax planner. So you have to carry forward those losses every single year. And if you don't keep track of those losses, I mean, that's a lot of tax savings that you are leaving behind if you don't keep track of that stuff and keep track of that paperwork and make sure you're carrying that stuff forward. So keep track of your suspended losses that you are carrying for every single year so that you can benefit from it significantly in the future. The third and last thing that I would say is keeping track of your initial investment in the asset, in the property. And this kind of ties into depreciation. Yes, depreciation is just on the building, it's not on the land. But what I'm seeing is that a lot of people, are losing track of that depreciable basis, especially if you switch professionals, because, and some of it is on a professional because some professionals don't always provide the detailed paperwork behind the depreciation calculation. So the new professional have to, work some magic to get to it. And yes, you can get there, but just think about it like this. To you as the taxpayer, your depreciation helps you get a deduction. That helps lower your taxes. If that's not correct, you could be leaving money on the table. And I do not like leaving money on the table as a tax strategist. I want you to get it all. All right. Those are just three things that I think real estate investors should be mindful of going into the next tax filing season or as you plan for the rest of the year. Have a